Do you ever start to humanize or anthropomorphize the markets? Think of it as a separate being. So, so over the last few days, the headlines have been just screaming day after day how volatile the markets are. Of course, at the second half of October, the markets are supposed to be volatile. So almost as if to say, never mind, the markets this morning are super flat. Tesla is up a little bit in the early going, and it's surprising that it isn't up more because the reality is that I think version 14.1.2 is getting really, 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 really close to a release. So let's take a look at what a kind of a compendium of the commentary out there was. Mad Max mode, Mad Max mode. This is this is the way Randy Kirk used to drive. I think that was used to. Yeah. Aggressive yet safe driving. That's how I would certainly describe my method. This new speed profile is a standout feature praised for confidently navigating heavy traffic without recklessness. It's ideal for urban areas since LA accelerates, makes good decision making in rush hour, merges assertively, and maintains control while outperforming human drivers in calculating risks. That's what the testers were saying. So the testers note that it's exactly what we needed for chaotic commutes, with one calling it epic for quick, smooth rushes. Assertive lane changes is the second thing that people mentioned. Reduces indecision. Lane changes are far more decisive and confident compared to version 14.1.1, with the systems committing quickly when safe rather than hesitating. This applies across profiles, making highway and city driving feel more fluid. Though Mad Max amps up assertiveness, users report fewer unnecessary waits, enhancing overall flow. So no more pushing the pedal. No longer have to go, what the heck? Could we please go a little faster? Brake stutter is largely eliminated, according to the third point, for smoother rides. Phantom braking and jittery stops from the earlier version 14 versions are mostly resolved, leading to more comfortable experiences. Only minor instances were noted in hours of testing, with the system now braking only when truly needed, like for deer or construction. We talked about that last night. Do you know that a few hundred people a year die from deer, running into deer and in other large animals? So one of the people that was posting last night was showing where it stopped very, very early for deer, yeah, at night. So this is resulting, he's 90% of the way there, is how some people put it, resulting very good, almost a V13 smoothness, 90% back to the level of smoothness with V13, while at the same time giving us all these new features and benefits. Number four, superior parking and garage navigation. FSD excels in complex environments, squeezing through tight spots, obeying obscure signs. It's 100%, according to, I think it was 𝐒𝐻𝐿 said, never ever missed on a no turn on red signal or a sign, and navigating multi-level garages with fences and cones. It parks precisely between the lines, backs in quickly, and even explores alternatives if the gates are closed. Early testers call it flawless for our end-to-end trips, including drive-throughs and superchargers. And finally, enhanced situational awareness and edge case handling. The system demonstrates sentient quick thinking, like yielding for lane splitting motorcycles, which would earn waves from riders as they go by, slowing for emergency vehicles, or rerouting around closures. It obeys speed limits better in profiles like standard. Handles, yeah, we know that it'll speed. Mine'll speed for sure. It'll go 80 and 65, no problem. It handles U-turns and roundabouts smoothly and starts drives instantly from park. Minor gripes include occasional loops in full lots or steering shakes, but disengagements are rare. I only saw the steering shake mentioned once, and they said it was only once in the entire ride. Overall, the sentiment is overwhelmingly positive, with calls for rapid expansion to more users and free trials. While not perfect, it's seen as a huge leap forward towards unsupervised autonomy. Investors Business Daily this morning says Tesla is trading near an aggressive early entry. amid the current whipsaw stock market and with third quarter earnings due next week. In intraday trade Wednesday, shares broke a steep downward with a volatile handle and a huge long consolidation, getting above Wednesday's high of 440 and 51 cents, if you care, could offer an entry level for aggressive investors. However, the current volatile stock market and upcoming earnings raise the risks. We know that we never know what's going to happen the day or the day of, the day after the earnings call. Tesla is now also on the IBD leaderboard watch list and enters Thursday's stock market up 5.3% on the week. And that's based primarily on strong move Wednesday when it regained its 21-day exponential moving average. The stock tumbled 5.1 on Fridays last week, and that undercut the 21-day line in recent lows. However, Tesla now has a 13% deep handle with $470.75 as a buy point on a very deep base going back to late December. So a buy point at 470. Tesla stock eyeing a possible early entry comes as the EV giant released a new Mad Max mode. As part of the latest full self-driving on FSD, this mode allows for higher speeds and more aggressive driving. Tesla's been rolling out its latest FSD V14. We know that. Analyst consensus pegs third quarter EPS falling 26% to 54 cents compared with last year, and sales increasing about 4%. All right, so 54 cents. I've also seen 55 cents. In fact, it's going to right here. Let's see. However, the sharp consensus, which tracks recent analyst revision trends for a potentially more accurate estimate, is at 55 cents a share. And by the way, they went and pulled the top three questions, so I didn't have to off of where the voting is going right now. All right, so number one question: what are the plans for new car models? Will Tesla build compact car models leveraging the unboxed Cybertruck platform? Will Tesla build a traditional SUV and pickup truck in the Cybertruck platform? That probably will not be answered, because Elon will say that this is not the time and the place to talk about new products. What are the latest robotaxi metrics? Now, that would be one that is theoretically should be on the list. So the metrics they're suggesting here: fleet size, cumulative miles, rides completed, intervention rates, and when will safety drivers be removed? What are the obstacles still preventing unsupervised FSD from being deployed to customer vehicles? Yeah, what's left? What do they need to see? What are the present challenges what are the present challenges to bring Optimus to market, considering app control software, engineering hardware, training general mobility models, training task-specific models, training voice models, implementing manufacturing, and establishing supply chains? Out of all of that, what are the things that are really standing in the way? I'm guessing that we're not going to hear a ton from Elon on that one either, but we'll see. Those are the top 5 questions as of now. You'll notice there's no 4680 question in there. There's no energy. Now, that's not all 10. That's only the top 5, but those questions are not in there. Tip Ranks adds this: options trading volume on Tesla is about normal. However, there was some bullish activity in the options market as more people were buying call options compared to put premiums or put options. Notably, the put-call ratio is 0.56%, meaning there were almost twice as many calls as puts, which is bullish, very bullish. 24/7 Wall Street says our forecast through the end of the decade for Tesla is based on the company seeing projected revenues growth climb from 112 billion to 297 billion, so that'd be a little less than 3x. But alongside normalized EPS growth from $1.91 in 2025 to $11.24 in 2030. That is a 6x. I'm confident that the numbers are going to be a ton higher than that, but hey, 6x in 5 years, that's a stock everybody should want to own. This is Randy Kirk. Please hit all the buttons. The CPI should be out today, but it won't be due to the shutdown. However, the employees who do that work for the Bureau of Labor Statistics have been called back, and we will get a report on the CPI next Friday. Now, I'm going to make a guess that maybe the government opens up next week. It won't open up on Monday because then the Democrats would have to say, well, yeah, it was all about the No King's Day. It won't be on Tuesday because it'll still be too soon. So I'm thinking maybe Thursday, the Democrats will be able to make some other excuse for caving to POTUS. Top 10 takeaways from the Federal Reserve's October 2025 Beige Book. Now, if you are new to the channel or you're not really that sophisticated when it comes to all these reportings, the Beige Book comes out about every 6 weeks. That's from the Fed. They have, I think it's 12 districts, and they go to all 12 districts and they ask those districts, what are you seeing out there? And then they compile it all into the Beige Book, and then they do give a breakdown on the districts within the Beige Book. The Beige Book is, generally speaking, fairly highly regarded, I think, by the market. I've seen it move markets. And the information, the thing that's cool about it is that you have these Fed governors and Fed presidents who are right out there on Main Street, and they're talking to the real folks. So number one, economic activity. These are the top 10 takeaways. Economic activity is stagnant nationally. Economic activity changed little overall since the prior report 6 weeks ago, with slight to modest growth in 3 districts, no change in 5, and slight softening in 4. So very flat. Sectors like financial services and real estate showed mixed trends, while agriculture, energy, and transportation were generally off. So agriculture, energy, and transportation off. 2, consumer spending edges lower. Retail spending inched down amid rising prices and uncertainty, though auto sales got a lift from electric vehicle demand before the tax credit expired. Higher income groups are sustaining luxury travel spending, which is holding up the whole market practically by itself. Employment remains stable but subdued. Job levels held steady across districts, but hiring demand was muted. More firms cut headcounts via layoffs and attrition due to weaker demand and AI adoption. Though, notice that, both AI adoption, not just weaker demand, but AI adoption. Though labor shortages persisted in hospitality, agriculture, construction, and manufacturing due to immigration policy shifts. But we also saw the National Federation of Independent Business report the other day saying that there's a mismatch between what people are, what their skill sets are and what they're looking for. Number 4, wage growth is modest to moderate. Wages increased at a modest to moderate rate in all districts, with pressure rising from higher employer health insurance costs. Easier labor availability led to more temporary and part-time hirings instead of full-time in some spots. That'd be an interesting difference. Part-time and temporary has been down over the last 4 years. So if that is starting to pick back up again, that would give us a more normal economy. Number 5, prices continue to rise. Prices edged higher, driven by faster input cost increases from tariffs and imports, insurance, healthcare, and tech services. Notice now it's no longer just tariffs. It's also insurance, healthcare, tech services. Some manufacturers and retailers pass tariff costs to customers, while others absorb them. Demand softness lowered prices for steel and lumber in some places. 6, manufacturing faces headwinds. Activity varied by district, but was generally challenging due to tariffs and fading demand. Philadelphia saw moderate growth. We talked about that yesterday, while Richmond and Chicago noted declines. Modest improvements were expected in the 6 to 12 months. You're going to see this. The optimism number is going up. I think that's what we should be paying attention to. The optimism level is increasing. Real estate mixed with declines. Residential sales were flat or down with rising inventories and moderating prices. Commercial was unchanged to slightly up in districts like Boston and Cleveland from lower rates, but office vacancies rose. That's not a good sign for the office spaces. Retail and data centers are strengthening while lower tier properties weakened. I also saw a headline that says that the large warehouses are doing very well right now. 8, district-specific variations. Highlights include slight expansion in Boston, decline in New York, growth in Philadelphia. So there you got it. Number 9, outlook cautious amid uncertainty. Future growth expectations differ by district and sector, with some anticipating demand rebounds in the next 6 to 12 months. However, elevated uncertainty loom large, and so we're just not sure, but optimism coming back. Key risks and prospects: tariff costs, immigration policies, uncertainty hit labor supply, and consumer confidence hardest for middle income groups. Yes, we know this. But the lower and middle income groups were being more destroyed during the last 4 years because of inflation. Optimism flickered in energy and some manufacturing for 2026, but agriculture worsened from low prices and weather. The Philadelphia Fed surveys came out this morning. It was mixed also, but same thing. Optimism, optimism, optimism. Okay, what about earnings this morning? Bank of America reported after the close yesterday, they were a beat on both the top and bottom lines. They guided that they're guiding higher than they were. They're expecting to hit record levels. They said about the consumer, CEO Brian Moynihan highlighted a resilient economy with strong consumer deposit growth and robust small business lending, noting efficient scaling in credit relationships amid broader economic expansion. Morgan Stanley was a beat, top and bottom line, with EPS of 280, topping its consensus of 209, largest margin in nearly 5 years, and revenue of $18.2 billion, up 18% year over year. United Airlines beat on the earnings, missed a little bit on revenue. Overall profit up amid premium travel strength. They guided higher, and they said U.S. consumers. CEO Scott Kirby noted economic resilience despite macro volatility in the first 3 quarters, with improved demand in quarter 4, boosting premium cabin revenue 6%, loyalty programs 9%, attributing gains to brand loyal, affluent customers amid travel rebound. ASML reported after the close, they beat on their case, they beat on the sales, they beat on margins, but their net income is a little tiny bit off. Taiwan Semiconductor, this is the most important. Well, Bank of America is probably just as important. Taiwan Semiconductor beat on profit, surging 39% year over year, and a slight miss on the sales. Guidance was raised much higher than expected. U.S. consumer, they said of the consumer, CEO CCY emphasized strengthening conviction in the AI megatrend, driven by rising consumer adoption of AI models, boosting compute and semiconductor needs, monitoring U.S. tariffs as a risk, but overall positive on resilient demand amid global policy shifts. And you're going to have to forgive me. I did not do this, the inflation numbers this morning or the president's ratings this morning, but I'll get back to that tomorrow for sure. All right, this morning we've got Tesla now up 0.53% to 437.44. Obviously, we just talked about it, but there's a 440 threshold. There's a 444 threshold, 450 threshold. We have a whole bunch of thresholds that we need to bust through in order to get back up to all-time highs. We've got the NASDAQ up 0.64. We've got the Dow Jones up 0.15. S&P up 0.36 and still sitting there about a half a percentage point below all-time highs. We've got Apple down a little bit. The rest of the Mag 7 is up, with NVIDIA doing really good, but they also had really pulled back. So they're sitting at 182.92, up 1.72, and the VIX is still sitting above 20 at 20.79. It had come down a little bit to around 18, but now back above 20. Suggesting that people are still a little nervous about all the tariff talk and what that's all going to mean. I'm not sure what else they're nervous about, but that would be one thing. We've got the Cathie Woods are 100% mixed. I see just as much red as green. Interesting though, Block up and PayPal down. You don't often see those two going in opposite directions. Okay, we have got the bonds this morning. It's been all morning. 0.001 down. That's about as flat as you can be without being at zero. And then we've got, sitting at 4.044. So 4.4 basis points from going into the threes. We've got oil up 12 cents at 58.39. Natural gas up 0.2%, just over $3. You've got gold down this morning. Gold up. I'm sorry. I got to get new glasses. No, these are new glasses. Anyway, gold up another $74, another 1.78%, sitting at 4,276. Have not hit 4,400 yet, so I'm still in the clear. I'm believing that this is going to just crash. It's not going to be pretty. Silver up another 3% this morning to $52.96. It's going to be ugly on the silver too. Copper is down 0.64, and that is now under $5 at $4.98. And Bitcoin down 898 this morning at 110,448. So staying consistently under 111. And Ethereum, on the other hand, is climbed slightly above 4,000 again, up 0.31%. All right, later this morning, you will have, or later this afternoon, rather, you'll have Bradford Ferguson, followed by Cern Basher. What a day. Scott can't be bad. Can't be, has to be really, really good. And then last night, I did had a great program. Who was that? Oh, yes. We had Jeff Lutz back. And you guys watched it. Pretty good numbers, but not as much as I was expecting because this was one of the best programs ever on the show. And it's still evergreen. It was the earlier show, but it was the show that I do that's supposed to not be quite as news driven. I don't know if you know that. The 4 o'clock, 5 o'clock show, that show is news driven, just like the morning show, but with a co-host. The late show at 7:45, that's designed to be more of a, yeah, it still be evergreen. A week from now, you can still read it or watch it. It would be interesting. Anyway, but that was with Jeff Lutz. Jeff Lutz is going to be back helping us out from time to time. Maybe I can convince him to come every Wednesday. But that show, if you didn't watch that one, there is the card, or there is the card. There's a card somewhere, and you should go back and check that out. That's all I got for you right now. Well, you want me just one more time, just really, really quick. We'll take a look at where Tesla's now. Tesla is now up 0.44, 437 and change. It's been great talking to you.